Hello, folks, and welcome back to another edition of Money in Motion, the new show. Only the second episode, so still getting used to the new intro. But Monte, happy to have you here with some new headwear, showing off the Bulls fans. Yeah,
Oh yeah, I got quite the collection of Bulls hats. I could wear a different one probably every day for like the next month. Not going to do that, but I could. I could. Weird flex, I know, but
and we're all
anyway.
very impressed. Um,
I'm a
okay.
man. I'm a man of many hats, literally. But lots of interesting stuff happening in the markets today, CJ. And nobody really cares about my hat, so let's talk about the markets. Um, because some of the names that have been pumping up big time, things like Coinbase, MicroStrategy, seem like they may be hitting a little bit of a red light here. I'm not convinced that that's the end of their uptrend, but um, you know, interesting nonetheless. What are your thoughts on what we're seeing today in the equity markets as they open?
Yeah, well, we had CPI. Why don't we just start with that?
Yeah,
Because we did come in a bit lower.
came in
Oh,
at three
I'm
percent.
having some trouble with the mouse. All right, here we go. My bad. All right, yeah. So we go after Forex calendar. Came in a little bit lower, as you can see. And initially right at 8:30 Eastern time, that's when you saw the pump in various assets. But more specifically, look at the DXY. I mean, what a move these past couple days. We were talking about it yesterday. Um, This looks like capitulation or something in the dollar, or at least the candles that would suggest it. Any thoughts on the DXY? I feel like we had to mention that.
Yeah,
To me,
we
it's just like the NASDAQ in general making new highs in the back of the CPI print. So Tom Lee's little, tactical short-term call looking pretty good here.
yeah, looking good. And I mean, you want to pull that dollar chart back up because I think that's definitely worth talking about. And, it's no coincidence. Look at the NASDAQ there first and how we're right on the verge of breaking into what would be new all time highs. And then you take a look at the dollar, and then it is at an equally critical level, right around 100.8, where we've bounced on multiple occasions during this, rally all throughout 2023, but this time we're approaching it with velocity that haven't approached it with in the past. So that leads me to believe that we're going to break down through that level, see some more negative price action in the DXY, and continued positive price action in the equity markets. It really is kind of that simple. To me, it looks like the DXY is going to break down below that critical level that so far has been maintained, this year. And if you're a bull, you should be pretty excited about that.
Yeah, I do think it's also interesting and may create or does create a potential other trade in yields or in bonds. I think, did we talk about ZF yesterday at
Yeah, a
all?
little
We can
briefly.
talk about that at the end of the show. But that's kind of interesting, having a nice day today as well. But any equities you'd like to hit off right off the bat? I saw you were talking about Microsoft earlier in the morning. Have you been trading that at all?
Yeah, still trading in and out of Microsoft. Let's take a look at that chart real quick because the Qs yesterday, not a great day for them. Ended up being pretty good. And what I said yesterday was, if we ended the day with sort of a hammer candle like this, and then we get a CPI print that's even remotely close to expectations, I think we see positive price action in the Qs because they were pulling back. We talked about the Magnificent Seven as they've recently been dubbed, and their obvious importance and the recent reweighting. But look at how stocks like Nvidia continue to test highs, and like I said, this is all happening as the dollar is coinciding with the lows. So I like the idea of being long tech right now. I know that's it seems almost counterintuitive, but just given the weakness of the DXY on the back of that CPI print, like when you have a catalyst like that where we miss and price does what it's doing right now, that is the epitome of a news failure. And a news failure typically leads to either positive or negative price action. And in this instance, I think it's going to be positive price action. So, yeah, I'm still in this Microsoft trade. I think, we head back up towards 350, ultimately break above that level. And, it'll be interesting to see what happens with earnings. Again, I think people are going to run this up into earnings. So if you're not in it yet, consider entering with the thought of possibly exiting before earnings, because that's more of a kind of unpredictable sort of catalyst for price. Like, in the past, it's missed earnings and price has gone up, like way back here. Or before, it's missed or it's beat earnings and price has gone down. So, that's more of a little more up in the air. But either way, I do think people run this one up into earnings, and there's still plenty of time between now and then for this one to make new highs, which I think it will. And as for the rest of the Magnificent Seven, I think the next best one, wow, that is some ugly chart art right there. What the heck is that? I think this is one of the better looking. I mean, look at this thing. It's breaking into new all-time highs. Well, not all-time highs, but local highs, and it's filled that gap and then some. I think that we're going to see continuation in Meta, partially because people are still so bearish, and we've seen so many puts just fold and just capitulate this year while trying to short Meta after these big gaps up. I think that just like I said with Microsoft, we see this one run up into earnings. So you don't need to play the guessing game when it comes to earnings. Saying you don't need to guess whether or not it's going to beat on the top or bottom line. But what you can do is try and anticipate how people are going to react going into earnings. And I think that if you look at a stock like Meta, people are going to expect it to beat, given its recent price action, and they're going to run the price of the stock up into earnings. So I'm bullish Meta, and you could really kind of say that for a lot of these big tech names, because many of them have earnings. Towards the beginning of next month, end of this month, sort of thing, and in the meantime, I'm content just riding those. And I think I will be taking significant profits before those earnings dates. Just because, like I said, that is a big catalyst. That isn't necessarily something that I can predict as accurately as I can anticipate human behavior. And, people like to run up these things into earnings. It's just what they do. So, that's what I'm seeing for the Magnificent Seven and the Qs in general. I think things are looking quite good. Um, and yeah, but I know you've been trading a lot of the crypto related equities. Any thoughts on those and what they are kind of up to today?
Yeah, well, after I kind of took profit on coin, I think I got out completely around like 80. So I definitely have been sidelined for the past week's price action. We'll see. Hopefully, get another opportunity to buy it again. I was thinking about playing the thing where you go like, you assume once a stock reaches 90 or like 900, it's going to go to 100 or it's going to go to 1,000, even number, psychology. Perhaps Coinbase does something like that. I don't know. Either way, I'm kind of content to just put it away for the time being, and I'll buy it maybe at some other points, just because it's up like 100% now in the past month. But in terms of like the thesis or the general idea looking ahead into 2024 and 2025, I think it is interesting, this particular idea when looking at, like, you look at the performance, we've talked about this relative to BTC.
Yeah.
The miners are up a lot more. I mean, Coinbase now is even up more than that.
Oof.
Um, and I've actually, you should add this new equity to your watch list, the Valkyrie Bitcoin Miners ETF, ticker symbol WGMI. But that's going to be one that I will be watching. Not really jumping in right now because it's a hockey stick, but this is something that I think could be interesting. When you talk about a lot of like crypto hedge funds or equity tradfi funds that want to get into crypto, it's much easier for them to get exposure to the space and to satisfy their mandate of giving their clients exposure to crypto through buying things that are already listed on the Nasdaq that are not at risk of custody problems like all of the disaster around FTX, Luna, and everything that brought down the market in 2022. So having them like have a high beta vehicle to Bitcoin might actually lead them to outperform, at least in the short run, because you remember when like the start of the institutional wave came in 2021, Bitcoin was what led. And now I think you're starting to see the miners lead in terms of high beta as kind of um, like a gold miner to an actual, like, the underlying commodity, it'll trend with high beta around to it. And then the last point I'll make about this is like thinking about the fundamentals of these companies. Looking at the balance sheets of these companies is a complete waste of time, in my opinion, because it like people will look at Coin on Twitter and they'll say, "Oh, it's not making money. It's an unprofitable company. Why is their stock price going up?" It's like that is so short-sighted. You're missing the whole point. You're missing the fact that just because you don't like Coinbase's spreads or app, which is a fair point, they are the like liquidity trap for institutions, people like ARK, players like who want to come in. They're going to buy things like Coinbase, regardless of the underlying business model, because at the end of the day, it is just an altcoin that happens to be listed on the Nasdaq. And yeah, that's all I got to say about that.
Rant over, mic dropped. Well said, and I agree with you. But I think that tweet posed an interesting question, right? We're seeing all this positive price action in these assets. You talked about how they're higher beta vehicles than Bitcoin. When do we see Bitcoin start to really move? Because, like you said, in 2021, Bitcoin was the leader for this price action. But, when is Bitcoin going to start to see some of this positive price action that the equity side is seeing?
Yeah, that's a good rhetorical question. That is a
Yeah.
good rhetorical question. Yeah, it's hard to say. It's hard to
Yeah.
say.
And
I
I
would
mean,
assume we break out here in a little bit, especially because I still see a lot of like very popular fades, like not buying Bitcoin or talking about Bitcoin's downfall, and it's just like not downfall, but retraced like 25K, and it just seems that everything under 30K is getting bought very, very vigorously right now. So I think you just have to kind of take that into account. Um, so
yeah, honestly, like for me, just looking at, if we take a look at the Bitcoin chart, um, I think that, if
just
there
as
was,
sorry to interrupt, but like the weekly chart looks really good. Just from a technical perspective, like it looks really bullish.
yeah, absolutely. And yeah, it most definitely does. And, what I was going to say is that, if there were ever a time to buy in hope of a breakout, because we all know how Bitcoin moves, it makes it makes these big moves in a matter of days, and then it consolidates for quite some time, right? So like you can see that, all of this move from 20K up to 28K happened in essentially 3 days of price action. The same can be said for this move here from 25 to 30, or more so from 26 to 30, really just happened in 2 days. And when you have this sort of consolidation like this, it's really nice and makes trading almost pretty simple because you have a clearly defined range. Like you said, CJ, people are snatching up Bitcoin below 30 like hotcakes. So you have a defined stop loss. I would set it just below this wick from that massive doji candle we had just last week. So, let's take a look at what that would look like. So, assuming this is your stop loss for your trade, you enter now, or what you could do is wait for a breakout above these critical levels. Just above the wicks is where you'd go on that. That would be about 31,555. And, I think we could plausibly see some potential upside. You have when you have this sort of consolidation, like we talked about before, when you have this sort of tightening of the Bollinger Bands, it typically means that we're going to get some volatility sometime soon. Now, that's not always the case, but with this sort of lack of volatility, I'm expecting a pretty decent sized move in the next couple of days here, or perhaps over the weekend. So I don't think buying spot at this price, or getting long futures, is a bad idea at all. I think that's a completely valid thing to do at current price. So yeah, that's kind of my outlook on Bitcoin. What about you? Would you be a buyer at these levels, or are you kind of sticking with the crypto related equities due to their higher beta?
Hmm. Yeah. I mean, yeah, I've been kind of sidelines right now. I mean, it was really good month earlier catching that move in Coinbase, so I just didn't want to give any of that back. In terms of like the market, it's just going to do what it's going to do. Like it's going up with a lot of momentum. I'm not going to like short and try to step in front of that momentum. You look at things like, Bitcoin Cash, another squeeze today. I mean, that would have just been a nightmare. I actually did try shorting it a little bit. And then once it wasn't moving, I'm like, I realized the error of my ways and exited. But like, it doesn't really make a lot of sense. I mean, if you're buying right now, I think you have to go with your approach. You're just buying high to sell higher. You're buying into the continuation of that breakout in momentum. And yeah, it's a good question. When is Bitcoin going to break out and meet up with those crypto equities? Because right now, it just appears that institutional players have been using those as their primary vehicle to have exposure to the space. Now, if we see things like the Hang Seng Index, which has been up the past 2 or 3 days, perhaps we have a little bit more speculation into things like, alts, more high beta, like things down the curb. Have you looked at Kospi at all lately? I know Nikkei had rolled over a little bit, starting to rebound. Not really though. So we just haven't had the buy momentum from Asia, and I think perhaps that's why we haven't had alts perform. Anyways,
Yeah, no, you're absolutely right. Asia, we need Asia to be risk on, and right now they're most definitely not. The Kospi, although it's had a good 48 hours prior to that, it had a really rough week. Fell out of the channel that we had mentioned um, a few weeks back, but I think that we could still plausibly see the alts move just on the back of more short liquidations. People are still trying to short these liquidations, and Sleepy Puppy Crypto says, "Love hearing trading strategies. Volatility's been low for too long now. Definitely expecting a big move soon. Bias for me personally is based on the RSI. Yeah, it's another indicator saying that we're due for a pretty imminent move here. But one trading strategy that I think is one that could really be beneficial in the next couple of weeks here, is one that is quite simple actually. And that involves, oh, here's the Kospi, by the way. So as you can see, it had pretty rough week, fell out of this channel and is now turning back up. So we'll see if it can come back up and retest the top of this range. If not, it may be in for some ugly price action. For now, the target is 2605. But really simple strategy for the alts for me. Look at the alts that are up today. Things like Aave, things like Bitcoin Cash. Even Comp's not up today, but this thing has still been absolutely ridiculous. And this, once I said it yesterday, and I'll say it again, it's a trap. This looks like a great technical setup for a short, and it looks like we could see something like this. But a really simple trading strategy is just look at the funding rate of these assets, and if it's below 0.01, then just don't touch it. And right now, Comp is at 0.0347. So, I mean, if you look, there's nothing really. Binance is actually higher than Comp today. This has actually fallen pretty significantly, but still, I wouldn't want to be shorting anything with a negative funding rate because that just sets you up for a short squeeze. So I know it sounds counterintuitive, but something like Litecoin, which has, although the volume is down, the funding rate is positive. That really, like, and it's basically a neutral funding rate. It means that traders are undecided, traders are sidelined. We're seeing the same with Bitcoin and ETH, very similar funding rates, which isn't surprising given the recent price action. So very simple trading strategy. If an asset is in this realm of negative 0.03 or anything more than 0.01, just don't short it because you seriously run the risk of getting burned bad on the back of a short liquidation. And that's been the case for many, many assets. But if you look at assets like Aave, like this one looks actually decent today. The one thing I'll say is whenever you have this sort of divergence in volume and price, you need to be careful because it's indicative that it's not a genuine like spot buying move. And that goes back to my thing about the short squeeze, right? At one point, Aave had a tremendously negative funding rate because people were trying to short this thing at the lows, and they got squeezed out. Now the funding rate's back to neutral, but nonetheless, as you can see, when price starts to fall, people try and short it, they get squeezed out, and you can tell that this move isn't from futures buying or from spot buying because of this divergence in volume. So we're seeing higher price action but lower volume. That tells me that it's the result of shorts being squeezed, and we're seeing it in a lot of different assets. Uni's no different. We have this divergence, but still, continued uptrend is intact. So I actually like Uni here. I think we can see some continuation on the top of this range, and plausibly, more moves to the upside. But just like CJ said, we really need Asia to be more risk on in order for some of these alts to start moving. But I think that it's almost that time, and I'd keep a close eye on the funding rate.
Yeah, it really makes me think, retail always likes to think that they're front running like institutions into crypto. At least that's kind of been the narrative since 2018, since we had the futures in the CME get released. But now, you have to wonder, are institutions front running retail for like 2024, 2025, perhaps? So, like in 2017 when Bitcoin had you know, like five, what was it, like 30% corrections, something like that. I'm hoping for the next 30% correction. I mean, hopefully we don't go up another 200% before it comes. But in terms of like the Bitcoin equities, that's kind of how I've been looking at it more through like the 2015 to 2017 playbook. Plus, like, you don't have like derivatives markets. You don't have like perpetual futures on Riot. You just have options. So I'm not really sure how that influences like the short-term volatility. Anyways, unless there's anything you'd like to cover in terms of crypto, Monte, I have just 3 trades I'd like to talk about that we kind of went over in Discord with our community and kind of talked about earlier in the week. But
No, the floor is all yours, my friend.
all right. All right. So, we talk about crypto, we talk about things like Coinbase. For me, those are my large secular bets, things that, are looking to grow wealth over time. As for futures trading and doing things based on the COT data approach, that's like trying to yield, 15% returns per year or 10% returns with no correlation to the S&P or anything, and target less than a 5% drawdown. So if you can do all those things, that's how this strategy does well over time. And the key to it, much like poker, is that you have to, like, the smaller you bet over time, counterintuitively, the better you'll do. Monte showed me this YouTube video called the one more time, just one more paradox, and it breaks down the mathematics of this. So I started risking about 100 basis points to 90 basis points when I first tried this strategy. But within last month, I cut it to only about 50 basis points on average for each position. And the returns have been much better to the upside because, if you're only going to win 30 to 40% of the time, you're going to just do better betting smaller over time. I think it lowers or it raises the median. Anyways, let's talk about an example of those trades and looking for like crowded trades in terms of a lot of like shorts. So ZF is one that has actually worked well in terms of like actually rebounding and squeezing out some of those shorts on the back of the CPI number. So this was kind of a long that I talked about. I will not exit this position until we get back to more of a neutral level, like 50 on this COT oscillator, the blue oscillator that you can see. So the 5 years were the most crowded out of any of the 2 years or the 5 years or the 10 years or 20s. So ZF was the one in this particular trade. And if you look at what happened during SVB, earlier in March, the squeeze came very quickly and immediately, you were out. And so that's what I'll look at to get out of this position going forward. The other one that we did talk about yesterday in the stream that didn't work was peso. So we talked about shorting the peso because it was basically the second in terms of positioning that was very interesting. You see distribution that's occurred for a very long time in commercials. So when you have the inverse of that on, ZF, like sometimes one of the trades doesn't work, but the other one does work. So it makes up for all the losses and then some. So, putting the stop loss at the local high of like, right here of 5.8, getting stopped out and taking that basis point hit of 50 and losing it, that's fine when you have something like ZF on, and it kind of makes up for the other loss and continues. So, I'm no good. I'm not better at anyone else, I don't think, at predicting the future in terms of stock price movements or asset values. But where I can get an edge and be better, or where we can be great, is by looking for these asymmetric risk positions within positioning, and then ultimately kind of playing them in a portfolio against one another. And that can result in a very smooth P&L curve over time if done properly. So I'll continue riding ZF now that it's starting to work, but we'll see ultimately where that goes. Last thing I wanted to talk about in terms of what we've been talking about in Discord, we have a new channel known as the TradFi Inner Circle, where we discuss a lot of ideas. This one was from the 4th, last Tuesday. And this was an article that came out from Zero Hedge. And I remember a very similar article a few months back regarding the NASDAQ. But a few months back, it said that the NASDAQ, or specifically hedge funds, have never been more short the NASDAQ than they were. And if we go to the NASDAQ chart and just remember what happened, I mean, we went straight up. It was one of the most powerful short squeezes as a result of all of those shorts being forced to cover. Now we have an interesting target in terms of hedge funds shorting US banks. So the implied trade here was to go long XLF. So, we talked about some spreads on XLF, but overall, the contrarian play did work out here within banking. And if you look at like specific sector plays, like JP Morgan, for instance, that's something that's made, new local highs as well and has done really well. So, I think when you look at where a lot of hedge funds are positioned, it doesn't mean that they're necessarily going to be right or wrong. But when the payout comes, or, the catalyst eventually comes, the payout to the contrarian side is way higher than what you would lose. Kind of like the peso trade. It's like if you can be wrong and only lose, 30, but makes 60 when you're right, just do that over time. Oh, what's up? Do we have another viewer back there? Just getting up,
Yeah, yeah. Apologies about that. He woke up from his nap. You woke him up there talking about the peso, I think. But yeah, that's what it's all about is non-correlated returns, and that's smooth P&L. It's one of the hardest things to accomplish. Everyone's trying to like hit home runs and whatnot, but if you can assure, steady, just smooth gains, that's far better in my book and in by any quantitative metric, than just looking for the pico bottom or trying to call the top. Those are fruitless endeavors. Just look for the contrarian trade. It doesn't always work out, but when it does, like CJ said, when you have an article that says hedge funds are record short, you don't even need that. You don't even need like people to buy. All you need is them to exit their positions and price goes up. So that really kind of sets you up for some positive price action. So keep your eyes out for headlines like that. It seems like the banking sector could be next. But yeah, I think that is all we got for today. Or at least all we got for this show. Don't forget, we will be doing a member AMA today at 11:30 Central. If you guys aren't a member, you can check it out 14 days free at tradethechain.com. That hour is all for you guys, where we take your questions. And as you could tell from this episode, we cover pretty much anything you want to talk about, whether it's Ethereum or pesos. We cover it all. So check it out. 14-day free trial, tradethechain.com. You're going to definitely want to be at that member AMA because we also have a great community of traders that asks some awesome questions, and I'm really looking forward to it. But CJ, I'll leave you with the final word, my friend. Yeah, go ahead.
Yeah, you summed it up nicely. Appreciate it, all you guys. See you at the AMA, and take care.